Hey guys, it's Canadian Kyle here at the Wealth Holders Podcast, where we conduct long-form interviews with mining companies, industry experts, and other small-cap stocks. People are an important factor when looking at these investments, and we try and ask the right questions about the company. But we do have this recurrent segment, and it's called The Vault. In The Vault, we ask mentorship-like questions, questions where these guests, they're amazing guests, and they don't get the opportunity to pass down their lessons. So we ask these mentorship-like questions, and it's my favorite part of every interview. But The Vault is not available on YouTube just yet. It's available on Apple Podcasts and Spotify, but until I get my subscriber count up, guys, on YouTube, they will not be available. So make sure to like and subscribe. Thanks. Now, it's important to be able to connect with management and have that trust in them, and they need to be able to prove and execute as well. But you need to have a relationship and really trust that they're going to do what they say they're going to do, which brings me to this month's sponsor. We have Electric Royalties. They trade on the TSXV under the ticker ELEC. Now, I interviewed Brendan Urich, which I recommend you go check out. The recent interview, he talks about all the progress they've made in 2021. They've been doing well, but what I think really sets them apart is that they are focusing on a huge suite of metals that will be required for this electrification movement. They got cobalt, graphite, lithium, manganese, zinc, vanadium, and more. I'm not familiar with another royalty company that focuses on all these commodities. Now, full disclosure, I do have a position in electric royalties, so please do your own due diligence. But Brendan was the CEO that I personally connected with, so I decided to put my own capital on the line because they have been executed, and I don't think the market has realized quite yet what they have. Now, you might not connect with Brendan and think electric royalties is not the investment or speculation for you. That's okay. Maybe it's today's guest. So, without further ado, let's get on to the show. Hey guys, it's Canadian Kyle here at the Wealth Holders Podcast, and today I'm joined with Doug Silver. Now, if you have been in the commodity space for quite some time, you'd know Doug, but if you're new, he's probably most well known for being a co-founder of International Royalty Corp. This company, after a few years, sold to Royal Gold for north of 745 million. And we're going to talk all about royalties today because I love my royalty company. So, Doug, thank you so much for coming on to the podcast.
My pleasure.
I always like starting these interviews off asking my guests the same question. Uh, what were you doing when you were my age? I'm 25 years old. So what were you doing from 20 to 25?
The first half of that, I was getting my master's degree in economic geology at the University of Arizona. And because I was not a very good student, it meant that I was spending 24 hours a day trying to break even at the balance, sleeping, drinking, or otherwise enjoying the college life. The second half, I started to work. I started out as a field geologist for one of the large copper companies working in southern Colorado and then in the southwest US. So at 25, I was probably hiking around, taking rock samples and thinking I was smart.
And at 25, I bet you never thought you'd be where you are today. Now, I briefly went over your background, but there's so much. You did so many different things in this industry. And I just want to know, what was your driving factor? What motivated you? Was it just financial reasons? Or?
No, well, partially. I mean, all I ever wanted to be was a really good natural scientist. I wanted to be one of those guys that knew his rocks inside and out, found ore bodies, and just did really, really high quality science. And what happened along the way was I was involved in a discovery. Before I start that, the other thing, of course, is I didn't want to wear a suit. I thought people who wear suits were like the most robotic, impersonal people in the world. And us geologists with our free living lifestyle and going to places National Geographic doesn't know about, that was a far more exciting life. Look at me now. So I was involved in a mineral discovery in southern Colorado, lived in a deposit. And as a function of that, I got promoted into the corporate headquarters in Denver. And that began where I am today because I had never taken a business course, never taken an accounting course, didn't know anything about business, knew everything about the rocks. and
Yep.
I had to learn it on the job. But fortunately, I was in the first ever acquisition group. Before we built an acquisition group in Anaconda in 1981 or 82, all the acquisitions were usually done by the engineering departments. So I'm this young buck at 25 working with three really knowledgeable guys that were 30 years my senior. And we got to fly all over the world looking to buy the biggest mines for the oil company that owned the mineral company. It was a blast. It was the best way to get a PhD I've ever seen.
So are you in the camp of doing what you love then, or is that all nonsense?
No, 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 always. I think, people often ask me because I've worked in so many different sectors.
Hmm.
One is, why couldn't I hold the job down? And the other was, why did I keep switching disciplines? And the answer was, I learned early on in life, I'm not sure where, to follow my heart and not always my head. And every time I did one of these changes, to me, it was just more interesting. It was new, it was fresh, it sounded really exciting. Yes, there was more money. That was a motivating factor, but that wasn't the driving factor. I have a disease that I inherited from my mother, which is I'm infinitely curious. And when somebody pitches me on a really interesting idea, I want all in. I want to learn about it. And so each chapter of my life involved, somebody introducing me to something that I just thought was fascinating, and I thought I wanted to do it. So I changed gears.
Yeah. So what are you doing now? Are you doing what you love right now?
Yeah, if anybody asked, I'm retired. but 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 when I look at my 15-hour days, I've retired from working 20-hour days. I've really cut back to 15. In fact, I'm a workaholic.
You
Everybody
cut
knows
back to 15.
I cut back to 15. Everybody knows I'm a workaholic, but it was really funny because when I was towards the end of the life of International Royalty, particularly once we had it under contract, there wasn't a lot to do, and my board insisted that I cut back to a 20-hour week. I couldn't believe all this free time I had because I've spent my whole life working 60-hour weeks. It's just the way I'm designed, and I love it, and I'm enjoying what I'm doing. So why not? And working at 20-hour weeks, like, God, you guys waste like half the week.
That's funny. I hear you also love fishing too. So is that where all the deals happen? Is the meetings that aren't like meetings, the fishing trips,
No,
the golf courses, or is it in the
no,
office
what?
with the suit and tie?
Yeah, no. One is I've only played golf once in my life, and I was in Leadville, Colorado, at 10,000 feet. I think it's the world's highest golf course, and didn't understand why people were complaining about how hard it was to hit a ball 300 yards. Um, no, actually, it's the other way around. When I work, I don't play. And that's part of the reason I never took up golf. I never understood it was a form of work. Same thing with fishing. Fishing to me is a very personal
Right.
adventure. It's not a team sport. But now that I am at that chapter that I am, I have found that so many people in my world are avid fly fishermen. So now it's completely the other way. We go to play, but because we have a strong business relationship over decades, it's a lot easier for them to accept. And then I happen to live in an exceptional place. It's arguably one of the best fly fishing rivers in Colorado. It goes right through the ranch. So I walk 50 feet out the front door and
Oh
catch
wow. Perfect.
24-inch trout. I've taken one for the team. So no, I know a lot of people do the golfing and fishing to meet. Mine's the other way around. I tended to network at business meetings and conferences, and
Right.
then fishing has been a beautiful after effect of all of it.
So I love that. Yeah, you gotta have your own outing. But for royalty companies, a big part of it I see is negotiating and deal making, right? So is there any general tips you could provide young people out there about just negotiating in general in life?
Yeah, buy low, sell high.
Right. Yeah.
That's the most obvious one. No, I mean,
Hmm.
I actually I teach a short course at the University of Arizona in negotiating
Oh, wow.
strategies, and my opening line is still holds true today, if not more so, which is successfully winning a deal is about convergence. And when you're young, particularly if you're a young male,
Yeah.
you tend to always want to win. And if you don't win, then it's not a good deal. That's not how you get good deals done. You get good deals done by converging. Find out what they want. Just flat out ask them, what do they want? tell them what you want, and then the two of you work together as a team to figure out the compromise. And you'll get a lot more deals done. You'll get them done quicker, which is less expensive. And you'll find at the end that the outcome is good because both of you will walk away with a partial win as opposed to one party losing, one party winning.
Yeah, makes sense. Makes sense. Now, the mining industry has been underfinanced for quite some time, right? And some of these people have more leverage with these deals. But where do you see it today at 12 months after, like commodity prices have gone up in the past year? Like, where do you see it today? Is there more capital coming into the space, or is it still rather underfinanced?
Let's start with your overall question. The mining industry is underfinanced. Do you ever think that maybe a lot of those projects don't deserve financing?
That's true too.
they
Yeah.
they may think they're underfinanced, but there's a reason people don't want to give them money, and it's not because we're on low. Anyway, that's totally tongue in cheek because that would never happen. So here's the thing.
Yeah.
The money has come back into the business. The majority of the public mineral companies are gold. And as you know, a lot of the royalty companies are also precious metals. And when gold took its jump late last fall, the non-gold people came back in. And with all the talk right now about inflation, the gold people are coming back in. And so the audience that had left us, and they left for good reasons, but the audience that left us has returned. So now the question is, how do we keep them? Well, rising gold prices is rising metal prices is always the best way. But if you have people who aren't traditionally in the mining industry and they're investing now, and then some company makes a big discovery and their stock becomes a 10 bagger, that draws more people. And more importantly, it keeps the people that are new to the sector. And so one of the things I found fascinating, because I study these things, the incredible drill intercepts that came out during COVID and their stock didn't move, where pre-pandemic, the stock would have gone up a couple fold the next day. And it's something I watch now when you see a really, just a flamboyant drill intercept being reported. What happens to the stock? And I think what you're going to see is you're going to start seeing more investors who don't traditionally come into mining come in. A lot of them are going to be gold because inflation is on its way.
Mm-hmm.
But look at copper. I mean, copper is at historic highs, and some of the other thing. And then of course you have the battery metals, which
Yep.
either are or are not for real. We'll find out. So yeah, that's. I think there's plenty of money for good projects. I just think that there's a lot of people chasing marginal assets. I think
Right.
that's the politically correct way to say it.
I was telling you before the interview, Doug, that I tried my luck with exploration and I said, it's not meant for me. I'm not a geologist. So I went to royalty companies and I've been doing rather well. But I want to get your take on small cap royalties. Are we at like peak royalty companies right now? Because is it just consolidation from here? Or I can't see companies coming into the space that have differentiating factors now. It seems rather.
Okay, that's a complicated question. I'm going to have to give you a little bit of history on this. Is it okay if I ramble?
Please. Yeah.
Okay. So first of all, back in the 1980s and clear through to about 2009, there's literally thousands of royalties. One person I was talking to this week said their database has 8,000 royalties. By my calculation, the royalty companies only control about 3,000. So there's still a lot of product out there. But what happened was all of the very really big royalties have pretty much been acquired by the big royalty companies. Now, during the same time period, you had Wheaton, now Wheaton Precious Metals, come along and create the streaming model. So you got a big giant royalty company that's doing hundreds of millions of dollars a year in revenue, and your investors expect you to grow your revenues by 10% a year. You're not going to get that buying a 2% royalty on an exploration project. You need to put up more money so you can get greater revenues. And the streaming model is perfect for that. So if you actually pay close attention to the large companies, you'll find that most of them are actively chasing streaming deals. That's the new game, is streaming deals only. And that the traditional buying royalties or creating royalties is done at a much lesser extent. So the micro royalty companies. Right now, my database has about 43 royalty companies, of which roughly 40 are public. They're claiming to the public that they get to chase all the small stuff that the big guys won't chase. For some of the big guys, that's very true. But let me tell you, as somebody who built a big royalty company, if I see a good royalty that has expiration potential and all of the right characteristics, I'm going to bid for it.
Right.
So the idea that it's sort of a two-tiered system now, the haves who are the billion-plus-billion-dollar companies that do big streaming deals, and the have-nots who are the small ones, it's not entirely true. Now, to go to the next piece of history, so around 2009, 2010, the industry started a major shift into streaming rather than buying royalties. So now we have this flurry in the last 5 years of new micro royalty companies. And your question is right. How do they differentiate themselves? Well, a lot of them are still chasing precious metals because they get the highest market multiple. That's great. The other ones are differentiating themselves by being highly selective. A good example is uranium royalties. It's the only company out there buying uranium royalties. And if you believe in the future of nuclear, which I do, they're going to have a good run, as they have. Why? Because there's a lot of people who say uranium royalties coming a lot better way to play the uranium game than mining companies. And I know, because I know everybody in all the different companies, there's some guys who are just chasing battery metals. There's other people just chasing, nickel and copper. There's other people chasing this, that, or the other thing. Each one has its own agenda to differentiate itself, and because it believes it's fulfilling a critical investor need. Will they all survive? No. There's going to be a consolidation. But I think, and the big boys all know me, what I've been predicting is that the way that the boys at Wheaton created the streaming model, there is yet another new model that is on the verge of being created. And it will revolutionize everything that goes on in the business, because it'll be a new and improved model on how to do royalty/streams, this whole sector. And I spend it, because I have the time, I spend a lot of time thinking about what would that model look like. So how do you figure it out? You take all the deals where the people walked away from the table because they didn't like something you were doing. You make the list, which is
long.
long. What do you mean I have to overpay?
Yeah.
And then you systematically go through the negatives and see if you can create a positive out of it. So that's one of these evolutions that I'm looking for, and particularly for the big companies, because I think they're basically merchant banks now. They put up $1 billion for a copper mine in Panama, and they're serving as a merchant bank. They just don't get the investment banker fees the way the big banks do.
Right.
So
are you getting that creating streams, like brand new streams, brand new stream creation? Is that what?
Well, again, if you pay close attention to the royalty business, it has been evolving. And I'll give you an example, and I'm still tracking down a few of the data points, but I'll give you some general trends. When streams first came out, it was we'll pay you up front, and then we'll pay you $400 an ounce of gold. And Ian Telfer and the boys in the silver space said $3.99 an ounce silver, which is still a big mystery how they picked that number.
Yeah.
Well, that was great, but then gold made its run, and went from 800 up to 1600, and the companies were saying, hang on, $400 an ounce is a very low number given where gold prices are. So then one of the royalty companies, I think I know who it is, but we'll wait on that, said, okay, well, rather than 400 an ounce, we'll do it as a percentage of the spot price. And that completely changed the dynamics. And yes, the streaming seller got more money, but the royalty company is still making a lot of money. So both sides won. That might seem to you like a nuance, but it was huge. And in my last job, which I retired from in December, we were the first ones to create royalty on diamond mine. We were the first ones to create royalty on lithium mines. We had the privilege, because we were in private equity, to design anything we wanted, any way we wanted. And so we broke some new ground that had not been done before. And this is the fun part about watching the royalty space. Not a lot of players. And when somebody does a new structure, that's an evolutionary progress in the industry.
Right.
So it's kind of, for me, it's a lot of fun to follow it. And people who are royalty company followers also get tuned into, hey, I've never seen that done before. Is that good or bad? Well, go do your math and figure it out.
Interesting. So I want to ask you then, just in April, you became a director of Metalla Royalty, right? And then this
Yeah,
month, news just came out that you're a strategic advisor for Nova Royalty.
right.
Before I ask some questions, do you care to explain to the young people what's the difference in the role as a director than a strategic advisor?
The pay. No. um, an advisor, you're not on the board of directors, so you're not attending board meetings unless you're invited. They're really using you as a resource for deal leads. And in my case, I'm known to have a pretty good network in the world. People want access, so I help them with access. And then because I tried to figure it out, I think I've done around 200 or 250 royalty and streaming deals. So I've seen so many different structures. And then, of course, if you do a structure and then it fails or works, then you want to use it again or not.
Mhm.
So I'm kind of like a living encyclopedia on royalty deal structures just because I've done so many. So that's an advisory. On a board of directors, I serve the same purpose, but I'm also on the board where I get to vote on things. And if I don't like things, I can say no. And if I do like things, I can say yes.
Okay,
So
thanks for that
that's
clarification.
the big difference. Yeah.
Yeah. So why these companies? Why Metalla and why Nova? Is it because they're selective? They like Metalla is strictly just gold, silver. Nova, sorry, is just gold, copper, or copper, nickel.
Yeah.
Is that why, or is it the people, or what did you see in these companies?
So uh, after I retired, I got approached by many of the smaller royalty companies to help them out, and I'm humbled that they would even ask me. So I actually ran a process, same way investment bankers do, and I sent out a process letter and asked them to answer certain questions, and what was the compensation and all that. And of course, the next day I got an email from one of them saying, "Is there a data room?" Because we were running a process. So so what I finally decided, because most of them, the compensation was pretty much the same, I decided what was it that really interested me rather than how did they need help. And remember, when I built International Royalty with Doug Hurst and George Young, we started with a budget of we had zero money in the bank, and we maxed out our credit cards trying to get
Wow.
our first deal and trying to get somebody to finance us. Where in the case of Metalla, you got a company worth hundreds of millions of dollars. It's a much bigger platform, which means it should be a lot easier to grow it even bigger, faster, because you don't have to do it in little increments like you did when we formed IRC.
Right.
Um, Brett Heath, who's the CEO, is a friend of mine, and yes, if you do your work, he's a fishing buddy too.
Okay.
But I'm very impressed with Brett as the person and as a CEO. And then when I did my due diligence on it, it confirmed a lot of what I thought was going on behind the scenes. And I like his strong discipline. It's really easy to buy anything that's for sale, but he may be young, but he's exceptionally disciplined. And then he has a relationship with Novo, and because he does precious and they do base, I didn't have a conflict helping both.
Okay.
And my background, remember, I went to the University of Arizona, so I'm a porphyry
Copper.
copper guy
Yeah.
from my childhood in grad school, and and I like the fact that Novo's chasing copper because I love copper. I just think it's one of the greatest metals ever used by man.
So what's your outlook on copper? Is it getting a little overheated right now, or how's copper looking in a post-pandemic world?
Well, that's unfortunately that's a complicated question, but
Mm-hmm.
the short answer to it is the supply demand fundamentals are way out of whack, and it's going to take a while for all that inventory that was lost over the last year and a half to be caught up. Meanwhile, the demand for copper in an exploding economy is going to grow a lot faster than the supply can keep up. So I think it's going to take a couple of years for copper to not be in a crisis mode, which is
Okay.
great for anybody who owns
Wow.
copper stocks because copper is going to stay up high. Meanwhile, and this is the part that gets a bit ugly, the US is doing nothing to secure its own supplies. And China is absolutely running circles around the US with the way it's snatching up all the supplies. And if China continues to snatch up these big copper deposits, that copper is only coming back to us at a very expensive price, or it won't at all. They'll just sit on it. And the whole dynamics of the copper industry has me delightful because I think copper is going to stay high, but it's also, I think, going to be heavily manipulated by the Chinese, and we can't stop it.
Wow, I haven't heard anyone mention that before. So a lot of people are talking, is this transitory inflation or not? What are your thoughts on that? Like for copper, there's fundamentals at play, but overall outlook, macro outlook.
I think I think that in the short term, inflation has to exist simply because of the supply demand imbalance for all commodities, not just metals, but for all commodities. I mean, go ahead, go try to buy a used car right now. Good luck.
Yeah.
You
Yeah.
know, lumber. I'm renovating my ranch, and 2x4 or 4x8 plywood was $15 a sheet 5 months ago, and today it's like 60. And
60.
that's wood. Yeah, I mean, all commodities are so out of sync because of what we shut down during COVID. So you have to kind of break it into two pieces. One is, yes, it's going to be inflationary while the inventory catches up. Going forward in the future, it really depends on technology and how we're using commodities. And because of what happened at Davos 2 years ago with all of the ESG and everything, you're also going to see a transition in how we use metals in society, and that may take some of the temporary inflationary aspects off. I don't think it'll increase it. I think it may take it off. So I'm really bullish about the near term, but in the long term, things will settle down. They always do.
Right. So with I want to get your perspective on government inflation numbers like the CPI, and because I hear people in this industry saying, "Oh, it's cherry picked numbers," or what are your thoughts on CPI? And on top of that question, it's it's trailing data, right? So if we had a high inflation year in 2021, those numbers will look a lot better in the future, right? If it's already we've seen big spikes like lumber, you can't see
Yeah.
it spiking up like that again to that extreme.
No, it'll the inflation will wear off after a while as inventories and everything get back into sync. But it really depends on what you believe the global economy growth rate is. They're predicting this year for the US like 6%, which I don't think's happened probably since World War II. Will it be sustained at 6%? No way. They'll manage that down to, ideally you want to be at around 2%, one and a
Right.
half, 2%. So they'll manage that down. But right now we've come out of this pandemic, and one of the things I think it's caught a lot of economists off guard is just what really happened during the COVID to the businesses of the world. Because you look at the surge and everything right now, and COVID was only affected the planet for about 12 months. Why is the reaction to the surge so overwhelming?
Mm-hmm.
And a clue would be to look at the airports, because during COVID, and Denver International Airport, is one of the largest airports in the United States. There was like 20, 30,000 people a day going through it, and now it's like hundreds of thousands. Why is it? Well, everybody had this pent up demand to get the hell out of their house. And once the restrictions were lifted and everybody's getting out of town, so they're all getting on planes. So they're all buying airline tickets. Well, you could go to Hawaii for $300 6 months ago, and now it'll cost you $1,500. Supply and demand again.
Mm-hmm.
So it has to work itself out. I mean, if everybody finally walks out of their house and takes a trip to Disneyland or wherever and gets home, well, then they're not going to travel on a big expensive trip like that for another year. So it'll get caught up, and then things will ease up and we'll settle down. But I think the rapid reaction post pandemic has been it's been to me, it really caught me off guard for how rapid and the volume of demand. It's just it's been quite impressive.
Yeah. Well, and we recurring things too, I think. Like, well, I'm in Ontario here. Ontario's crazy. Like, we're just starting to ease lockdowns right now, and it looks like Canada or the States are already back to normal, no
Yeah,
masks, and so it's
yeah.
crazy. So I have a question for you, and it might sound silly, but are you a gold bug?
No.
Okay, why not?
Uh, yeah, I'm not allowed to talk about that in front of mining investors.
Well, I'll follow
No,
up with this
no, let me
question.
let me
Okay.
let me answer let me answer it quickly
Okay.
for you. First of all, why has gold traditionally been owned? It was a store of value, and we can go very simply. Let's go to the American Revolution. The southern cotton farmer has his bales of cotton. They put on a ship that goes to England. It takes 7 weeks to get there, another month to process it, another month for them to get paid. They didn't have, they didn't have PayPal in those days.
Hmm.
So then the money would have to go on a ship another 7 weeks back. I mean, it could be 3 to 6 months from when you gave up control of your product to when you got paid for it. So they use gold as the store of value in between. So they would give you this much gold, and then when they finally paid, you'd give them the gold back, and they'd use it as a trading vehicle. That was great. Think about World War II with refugees escaping Nazi Germany. What did they take? They grabbed the things that were most valuable: gold coins, jewelry, and they carried them on their person because they were very valuable, very small, relatively light. It was a trading currency. And now look at the world today. I mean, the hell with paper currency. Let's skip the whole generation using paper currency. Now we're using electronic currency with Bitcoin and all that. So why do we need gold?
Hmm.
The US government has Fort Knox. Everybody goes, oh, all the gold in Fort Knox. Compared to a $14 trillion national debt, it's irrelevant. It's a rounding error. So I think that the role of gold has changed. And a couple of years ago, it surpassed its industrial use with being a currency. But I don't really think we need gold. I don't see it, and the mining companies obviously want higher gold prices, and I hope they're all right. I hope I'm absolutely wrong.
Hmm.
But their costs have always gone up to where they're producing gold for roughly little less than half of the gold price.
So
And go back through history and look at it,
right.
20 years ago when gold was 600, they were producing gold for 300. Now gold's at 1800, they're producing it for 1200. It's always right around half of the price. So inflation is going to make their margins sink.
Because I'm just wondering, with governments being poor stewards of currency, like that's what a lot of people are looking at, right? But
Yeah.
then I think I look at royalty companies, I look at these gold mining companies. Why do they not hold gold on their balance sheet then? Why do they convert it to cash?
That's actually a pretty good question. I think it's because of what they tell their investors they're doing. They're not a gold fund. They're an active gold investor. And let me ask you, if you have a bar of gold sitting in your vault at your office versus buying a royalty on a gold project that may have 10 times as much gold as what was known when you bought the royalty, which is a better investment?
Right. Yeah. Okay. No
The
brainer.
upside potential is a huge piece of it. What I would ask the question is, why do gold companies get valued with a 5% discount rate?
Yeah.
Good question. When base metal companies are 8%, isn't a dollar cash flow? Apparently, if it's gold cash flow, it's better than base metal cash flow. And again, it's supply and demand of investors that drive this down. But I've never understood why gold companies got a 5% discount. They're not the Francos of the world, but the smaller companies, their cost of capital is way above 5%. So why are they getting valued with 5%? It makes no economic sense.
No, it doesn't.
So I have a lot of confusion about gold. That's why I'm not a gold bug.
Okay. Thank you for that. A lot to think about. Is there any other issues you see in the royalty company space? Like I told you, I'm heavily invested in royalty companies. Is there things investors need to be aware of this space that doesn't get talked about much?
Um, well, the ones that I know and have worked with and have sold to and have bought from, all of them have really good due diligence teams. They're all based fundamentally on technical due diligence. And for your investors who don't go behind the scenes, we're not just talking about recalculating the reserves or building a cash flow model. I mean, they're doing environmental due diligence, ESG due diligence, government permitting due diligence. They're doing everything you should if you're investing in mining, and they're really good at it. Do they always win? No. Mining is an inherently risky business, and now and then one of the projects will have a hiccup or one of the projects won't work out. That's not because of incompetence. It's because Mother Nature has an infinite bag of tricks to make you lose money, which is why it's a risky business, which is why investors require a higher rate of return to compensate them for that risk. But in general, I think the royalty companies are extremely well disciplined. They don't have the risk that mining companies have. I mean, the whole reason we build royalty companies is spot on. If you want to play, if you want to invest in a risky industry and minimize your risk, you should go with the royalty companies and not with the mining companies. It's just a better play in general. Now, the one exception to that, of course, is that if you're say you're a nickel company producing nickel and nickel prices skyrocket, you'll get more leverage than the royalty holder will because you have a bigger piece of the action. 2% royalty versus owning 100% of the mine. That's the trade-off. So if you're looking for something like that, you should keep that in mind. But royalty companies are scalable. At IRC, our best year we had over 50 million in revenues, and we only had 11 people in the company. Tell me how many industries in the world have that kind of revenue to employee ratio.
Mm-hmm.
And you take, I don't know how many Franco has now, but Franco's worth billions, tens of billions of dollars, and they still have a relatively small staff. They're very scalable, so that money isn't going to paying salaries and keeping people's benefits. It's pretty much all coming back to the investor.
Okay, I like how this is going to be a good segment. Now, hear me out with this question I have, but I want to ask it. I want to get your opinion on it. Now, the royalty companies, they're not in the charity business, right? But like you said, they have a lot of these benefits that mining companies don't. One thing mines have to do is they have to restore the environment. They also have to help provide for the communities in some circumstances. So even look at Peru with their election, like it's split down the middle. They want foreign investment, but then they want change, the inequality. But why can't, like, a royalty company is not held to any of these things? So why doesn't a royalty company do a dividend, a 0.5% to the shareholders, a 0.5% given back to the communities that they mine, or even 0.25%? Or
yeah, I would say ask me that question in 2 years, because the royalty companies are required by professional investors to follow the same ESG standards as all companies, including the mining companies. And one of the things that we as an industry are wrestling with is exactly what you're asking. What does that mean?
mm-hmm.
Because, and I'll give you some examples, and then I'll give you some examples. If I own a royalty on a mine anywhere, and I go into the community there and pump a bunch of money into the community, then the operator of the mine is not getting that credit. So then people resent the operator for not matching what I'm putting in as a royalty holder. I can throw money through the mining company and work in a partnership. That would work fine. When I was at IRC, we said, listen, we don't own any mines. We don't have any interaction with communities. We're basically a financial instrument. So for us to put money into local mining communities doesn't make any sense. However, the big mining companies aren't spending anywhere enough money on education. So we would give our money each year to one of the mining schools to use to get more students, get more people into the business. And that seemed to make a lot of moral sense to us. We were filling a gap the big companies weren't. Well, the big companies give, but the schools need a lot more than whatever's given. It seemed like a gap that we could fill without stepping on anybody's toes and without creating any political situation. Now, having said that, go look at Wheaton Precious Metals and what they do in communities. Randy Smallwood and his gang are so far ahead of everybody. And I'm not talking royalty companies, I'm talking in the mining industry. They have been very creative in different ways that they can serve the stakeholders better. And they're absolutely be commended on it. And same thing, in a way, I'm not as familiar with Franco's social programs, but, Pierre Lassonde and Dave Hartwell have both been head of the World Gold Council, who's pretty much set up the ESG standards with ICCM for the mining industry. He's very much involved in that. There's a lot the royalty companies too that just doesn't make it to the surface because it's not material enough to announce. But we're all very, very conscious that we're making money off of these mines and the people who work in these mines. We need to play a better role, but we're having a difficult time defining it because of these complexities. But we'll get there. It's not, there is a lot of money being thrown back socially, but we need to figure out other ways.
Yeah, even just a market and play. I could see a lot of people like support a royalty company, like, hey, look at, they're giving a 0.25% dividend to the communities. But it's interesting for sure.
Yeah. But I see the world going that way. I mean, you brought up Peru, and we're seeing the same thing in Indonesia and Mongolia and Chile, where the governments are stepping in and want a bigger piece of the interest in the mine. And and part of the reason is people are saying all this money is flowing out, not enough is staying with us. So figure out a way to leave a little bit for them, and then maybe that'll tone down some of this rhetoric.
Exactly.
Yeah.
It's a good solution, in my opinion. Doug, thank you. This hour flew by. It's pretty fast, but I want to make sure we get into the vault here.
Okay.
It's a recurrent segment we have on the podcast. It's just mentorship like questions, and it's my favorite part of these interviews. So far, it won't be available on YouTube, just Apple Podcast and Spotify until I get my subscriber count up. So guys, make
Yeah.
sure to like, subscribe, share. But let's get into it.
Business is about people dealing with people. You need to build your networks. And the way you build your networks is by working hard, execute, don't promote. You know, you get measured by what you complete, not by what you claim you're going to do. And have fun along the way. I've been in incredibly tough negotiations that involve billions of dollars. And when things get too tense, I crack a joke because it breaks the tension and it lets everybody reset so you can get back to negotiating. A lot of times in companies, they don't allow people to be humorous. I'm not talking about being a clown or anything, but I think sometimes people don't enjoy the ride because they're so busy driving the car.
Right.
And enjoy yourself. And if you're not, I tell my kids, if you're not happy, it's your own damn fault. If you're not happy, change what you're doing. The sun's going to come up tomorrow. Yeah, it's going to cost you a little bit of time and money, but why do you want to be miserable? You're only here for a short amount of time. Enjoy what you're doing and change. If you don't like what you're doing, change.
Oh, that's so motivational. Goosebumps there, Doug. Thank you. I appreciate it. I appreciate you sitting down and talking with me. I like letting my guests finish the interviews though. So if you want to, here's a chance to say anything you want to the listeners out there, but go ahead, finish us off here. And just...
Okay. Let me finish this off with just a quick statement. I hate Zoom. I am so sick of being on these calls, but I have to tell you, you're a wonderful interviewer. And the fact that you're encouraging more royalty investors, I mean, I'm all in with you, dude. Call me again if you want.
Sure.
The mining industry is going through a major transition. There's going to be a lot of money to be made. And as you know, I'm a firm believer in the royalty industry. So thank you for supporting us and following us, and keep telling everybody it's the place to invest.
Will do. I'm working at it. Thanks, Doug.
All right.